Okay, thanks everyone for joining. So let's get started. So today's session we are going to discuss about the intraday trading, and I'm going to cover few slides for swing trade using the same idea, and also we are going to have few discussions on trading psychology as well. Okay, so we are going to cover trade book, intraday strategy, trade plan, trade execution, book map, risk management, level 2, trading psychology, and using the same intraday trading setup, I'm going to cover few swing trade ideas using the same setup. Okay. So trading framework components. If we talk about intraday trading, most of the weightage, 90 to 95%, goes on trading psychology. Okay. Remaining 5 to 10% weightage goes to other stuff like trading tools, platform, technical analysis, trade book, journaling, indicators. Okay. So almost 5 to 10% we are considering for all the stuff which I mentioned here. But intraday trading, it's mostly on trading psychology, how we are dealing with emotions, feelings, greed. We'll talk about few stuff in this session for trading psychology as well, but we mainly need to work on psychological aspect if we want to be a successful intraday trader. Okay. Trading tool, I'm using Dash Trader Pro. So whatever I'm going to discuss now, that is based on this tool. You can use different tool as well. Um, Almost like functionality standpoint, it will be same, but menus and all definitely is going to change in different tools. But the functionality for considering intraday, it will be almost same. Okay. So this one, it's called montage window. Okay, here we see the bids and here we see the ask, and these are all underlying bids. The here we see underlying ask. Okay, and first whatever we see, these are all immediate bids and these are all immediate ask. Okay, and these are all bid price. Okay, in this column you see this is a bid price, and this size either we can see in terms of lot or in terms of share quantity, that you can change in montage, or if you are using different tool there also you can change it. Okay, and this is a bid to ask spread. Okay, the difference between buyers and sellers, whatever price they are quoting, that will be as a spread. Okay, and here we see the volume at a given time, how many shares traded, that you can represent as a volume. Okay, and this is the order window where we can select the number of share size and whether we want to go for limit order, market order, stop limit. Okay, and we can execute either buy or sell. Okay, let's move on to the next. For my strategy, I'm using 8, 21, 34, and 55 exponential moving averages. Okay, and all the moving averages I'm using high plus low plus close divided by 3. Like for a particular candle, opening price, closing price, high and low, these four price will be having, right, for a particular candle. So from that I'm using high plus low plus close divided by 3. Okay, and there is not like hard and fast rule that you need to use a similar strategy. But this is working best for me. That is why I am using 8, 21, 34, 55, and all these numbers are derived from the Fibonacci numbers. Okay, and the candle, you can use like high plus like low plus close divided by 2, or there are multiple ways to calculate the moving averages. Okay, be different people will have different calculations, but it's working best for me, so I'm using this high plus low plus close divided by 3. Okay, and as I mentioned, I'm using 8, 21, 34 moving averages, and in my chart I'm projecting Camarilla pivot points, and like yesterday's high, this y, like y low means yesterday, and yy is day before yesterday. Okay, so yesterday's high and low, and day before yesterday's high and low. And recently I have added yesterday's like previous days opening and closing price as well. That it's not there in the chart, but I have added that as well. I have given few references. Okay, you can refer that, like Pivot Boss. You can see the books and some YouTube recordings also. You can go through that. These are all very good recordings. Mark Douglas is one of the best trading psychologist. Okay, so he has given some presentations on his book Trading the Zone. There are four, I think, sessions. You can go through that. These are all based on trading psychologies. Okay, so book map. I have few screenshots from the book map. If somebody is interested, these are all I have taken from Think or Swim. Okay, so if somebody is interested, they can refer that. Okay, so no need to go through these like slides. I will just include it. If somebody is interested for book map, they can refer these setup. Okay. Now, we'll talk about trade book. What are the setups I'm using? Then we'll start discussing about the intraday trading ideas and how we can how we can find out the charts for the intraday trading. Okay, so trade book is very much important for intraday standpoint, because whatever like setup we are going to trade, we need to define all the criterias: entry criteria, exit criteria, and partials. Okay, without a trade book, if you trade, that is considered as a gambling. Okay, intraday trading is not that simple. Okay, we need to deal with emotions, feelings, greed, and mainly we need to deal with our psychology, and that will develop over time. It's not like a like 1 day or 2 days or maybe few months we can achieve that. It's really going to take some time to become disciplined and consistent. Okay, so trade book is primary criteria. Whatever stocks we are going to trade, we should have defined all the criteria clearly. Okay, if we are doing swing trade or like investment, we can take some time to see whether chart looks good, fundamental, or we can do a lot of technical analysis. But considering intraday, you will not have enough time to think and act. Okay, price will move rapidly. You will have very limited time to enter into a positions and exit. If you're talking about momentum trader, if you're talking about trend trade, there are people in our community doing trend trading. They will enter probably in the morning, they will hold it for few hours, maybe end of the day they will close their positions. Okay, that is again different setup required, different trade book required. But what I'm going to cover in today's session is like momentum trade and opening range breakout. Okay, so in order to trade any stocks like opening range or momentum trade, we should have defined all the criteria clearly before entering to a position. Okay, so moving averages, as I mentioned, I am using 8, 21, 34, 55. These are all derived from the Fibonacci numbers. High plus low plus close divided by 3. And that is how I am using the exponential moving averages. I have three types of setup: harmonious chart, rejections, and reversal. We'll talk about that. Okay, so harmonious chart is a in major time frame. Mainly I'm using 1, 2, 5, 15, 30, and 60-minute time frame. Okay, 1 and 2 I am using to decide for entry and exit positions. 5, 15, 30, and 60-minute I'm using to define the strategy, whether I'll go for long or go for short. Okay, so in harmonious chart, 5, 15, and 30 and 60-minute price actions follows the trend after open. I will show in the chart how it looks like. Creating higher high or higher low in 5, 15, 30, and 60-minute chart after open and follow the trend. trade above 5, 15, and 30-minute candle high and VWAP for long setup, and trading below 5, 15, 30-minute and below VWAP for short setup. Okay, this is a primary criteria for any of the setup I'm using. These will be the primary criteria. Rejections. In rejection setups, what will happen? It's just a subset of harmonious chart. Again, it will have it needs to have a harmonious chart in major time frame like 5. I have not included 5, but I'll prefer to have 5, 15, 30, and 60-minute at open price, reverse, and get rejected at important daily level. And then rejections at important daily level, creating higher high or higher low in 15, 30, and 60-minute chart after open, after rejections. Elevated volume, when it will move from that particular rejection zone, I'll expect a good volume. Okay, and trading above 15 and 30-minute candle high and VWAP for long setup, and it should trade below 15 and 30-minute and below VWAP for short setup. Okay, lower time frame moving averages may not be in sync. Lower time frame in the sense 1 or 2-minute chart, it may not be in sync with higher time frame, because which will cause price to move in reverse directions at open, then rejections at important daily level. Okay, and reversal setup, what I will expect: rejections at important daily level, creating higher high or lower low in 5, 15, 30 and 60-minute chart after open, and in pre-market 1, 2, and 5-minute chart EMA crossover. Price should close above or below all EMA in 1, 2, and 5-minute chart. Price should trade above or below VWAP based on long setup. We can expect a hammer or a solid or engulfing candle. Okay, we'll see in the chart how it looks like, then it will be more clear. Elevated volume on reversal. In this setup, moves usually will be crazy as price action reverse moves likely. Most of the people will get stopped out, because if somebody has short at price, and if it reversing, all the people will have stop loss, right? So there is a high probability that those stops will get flash out. So that will provide a crazy move. Okay, so there is a candle anatomy. For if it is a red candle, open, close, high and low. Green candle, we see open, close, high and low. Okay. Now, for intraday standpoint, I will prefer to see a candle in the pre-market with a solid um, candle. Like, it should not have large wicks, or maybe if it is having very small or no wicks, that will be preferred. Okay, I have selected two stocks. One is NCLH and Netflix. Here you see there are no wicks. Okay, in the pre-market price actions, these are all mostly solid candles. Okay, so no wicks, or if it is having very small wicks, that should be fine. Netflix, uh, it's also again having no wicks, and moving averages, it's in order. This is 8, 21, 34, 55. Okay, so for short setup, 55 should be above, and 21 should be 8 should be below. 8, 21, 34, 55. Here also 8, 21, 34, 55. Okay, and this one you see, this is a VWAP. Okay, and pre-market price action, I select the stock based on the pre-market price actions. Whether it is having a large wicks or no wicks, or solid candle, whether it is having a proper kind of following trend, it should not be all over the place, and it should have a decent volume. In short, pre-market price action should be appropriate in order to trade or consider that stock as opening range breakout. Okay, so next one, this one is a short setup, and this one is a long setup. Okay, here also see pre-market price action. It's having wicks, but not that much. Other candles, it's pretty much solid candle. Here also, you see this candle is solid candle, no wicks. Okay, so I will expect stocks to move well in the after open. Okay, and after open, you see the moving averages. It's in proper order. Okay, it's like 8, 21, 34, 55, and VWAP. Okay, here also Baba I have selected, but it's a different day. Okay, here also see it's having a wick, but other candles it's not having that much wick. It's a kind of, you say, engulfing candle. Okay, this gives me a conviction that there is a high possibility that it will go up. So these are the criteria I am mainly using to select a stock. Okay, like before trading opening range, I need to do a pre-market analysis and select the stock based on the pre-market analysis. We'll discuss in detail what are the criteria I'm using to select the stock for opening range breakout doing the pre-market analysis. Okay, this is like a long setup, but this is a reversal setup. Okay, so if you now go through my criteria for the reversal setup, you will see what are the criteria I have mentioned and whether it's matching or not. So here in the pre-market, see these wicks, these candles, it's not having large wicks, right? It's a small candles, and just before 5 minutes, you see a solid candle, okay, without any wicks, which gives me a conviction that there is a high possibility that after open price will go up. If there is a wick, what happens? And one second. Okay, probably we have to switch back in 10 minutes, okay, to other Zoom. Um, okay, so here, if there is a large wick, what happens? There will be there will not be a conviction between buyers and sellers. Okay, like bulls, they will try to push the price up, and bears, they will try to push the price down. Okay, so in that case, after open, there will be a high probability that it might chop around, or risk to reward will not be in favor. Okay, so that is why I am selecting a stock which is having very small wicks or no wicks in the pre-market. So in that case, after open, there will be a good possibility that risk to reward will be favorable, and we can trade that stock for opening range breakout. Okay, so I will go through multiple criteria and we'll see how this fits for opening range breakout. Okay, so these are all criteria I'm using to select the stock based on the pre-market analysis for opening range breakout. Okay, and let's see the game plan for the pre-market analysis. What are the things I'm looking for to select the stock for opening range breakout? Stock has to be in harmonious chart. Okay, most of the time frames like 1, 2, 5, 15, 30, and 60-minute chart, if it is harmonious pattern like 8, 21, 34, and 55, all these four moving averages moving without having any crossover. Okay, like you see here, right? These moving averages moving without any crossover, okay, without touching each other. That will give a good conviction that there is a high possibility that this price will have a good move after open. Okay, if there is a moving average crossover, straight away I will avoid that stock. I will not select, or if there is any low volume or if there is any large wicks in the pre-market, I will completely avoid that. So that is why I have defined the criteria. Stock has to be harmonious chart in 1 to 5, 15, and 30-minute chart, since 30-minute chart, um, and nice to have in 60-minute. Okay, if we are having all the time frame in sync, that will be really great. If it is not, still it's fine till 30-minute chart. Price action should not have large wicks. That is what we have discussed, and should have good volume in the pre-market. Like at least if it is having 50K or 100K, that would be really good. If some stocks are having very low volume, like 200, 300, 400, 500K, or not sorry, not 500K, like 10,000, 5,000, or 1,000 volume in the pre-market, that will not be a good candidate for opening range, because low volume price actions will not be appropriate after open. So we'll try to avoid. So we'll expect some good volume like 50K at least, or 100K. That would be really great if we are having good volume in the pre-market. And we'll look for a stock which is having gap up or gap down. Should not trade near large resistance or support after open. Narrow pivot range might provide good move. Pivot, it's actually different strategy we are not going to cover in this session because there are a lot of things. If you talk about pivot, okay, so that we are not going to cover much in the pivot in this session, okay, regarding the pivot analysis. Then news catalyst and earnings, definitely that will be having a good move if it is having any earnings or news. Okay, after open, we should expect either it is creating higher high or higher low based on the long or short setup. Just before open, 1 or 2 minute or 5-15 minute charts candle should be solid without large wicks. That is what I showed you in the chart, right? What is a primary criteria I'm looking for? Okay, and should have good price action in the pre-market, no large wicks, and I will expect a solid candles. And I already discussed what are the primary criteria I'm looking for. Low bid to ask spread. Okay, so like if we see a large spread between bid and ask, the high probability will be a slippage. When you will enter into a stock, you will see a high slippage. Okay, so we will try to avoid any stock which is having low volume, high bid to ask spread, and order flow also if it is not good after open. Okay, so we will avoid any stock having bid to ask like large bid to ask spread, and we'll select if any stock is having low bid to ask spread. I prefer to avoid noisy stocks. The reason is New York stock, whatever stock traded under New York Stock Exchange tends to have low volume at open, and most of the stocks will not trade very well exactly after open. Okay, I'm when if I talk about opening range breakout, I prefer to avoid any NYSE stocks. Okay, you can select Nasdaq, which is fine, but NYSE stocks tends to have very low volume at open. It might get good volume after 5-10 minutes, but that will not be considered as opening range breakout. So I prefer to see any stock which is trading under NYSE. How we'll find out what stocks trading under NYSE? Here it will mention Q is Nasdaq. If it is mentioned N, that will be NYSE, New York Stock Exchange. I will prefer to avoid that unless until it's having a news catalyst, earnings, or in the pre-markets trading with good volume. Okay, otherwise I will prefer to avoid any New York Stock Exchange, any NYSE stocks. So we are clear till this, right? Okay, so let's move on to the price actions. So considering all what we have discussed, I will prefer to look for gap up for long setup, gap down for short setup, harmonious chart in most of the time frames, preferred all 1, 2, 5, 15, 30, and 60. Okay. And here I have added few time frames, not all. Like if you see 5 minute, it's harmonious chart. 8, 21, 34, 55. It's in sync, not touching each other, moving uniformly. Here, 30 minute also, you see the same. Okay. Daily chart gapping down. 2 minute harmonious chart. 15 minute harmonious chart. 1 minute harmonious chart. Okay. It's 8, 21, 34, 55 moving average is moving without touching each other. 60-minute chart harmonious. Okay, so if we see all time frame 1, 2, 5, 15, 30, and 60-minute, expected there is a high probability that that stock is going to go as per our directions, like if whether it's a short setup or long setup. Okay, along with that we can include book map as well, just to see whether it is in line with our expectations or not. In the book map you see the large bid downside. That means there is a high probability that stock is going might go down. Okay, and here you see there are no large ask. Okay, there are very high bids. Okay, these are all very large quantities, very large quantity in the downside. So there is a high probability that this price is going to go down. Okay, in the from the book map we can see what are the levels we can book profit. Like here we can book profit, like we can just go with the large market participants in this number, like 2052 we can book some profit here. 20 we can book some profit. These are all like to define where we can book profit and we can see whether our setup is in line with the large market participants or not. I'm defining the short criteria based on these moving averages, okay, and gapping down. But how do I ensure that large market participants, they are also in line with my expectations, or I am in line with their movement or not? That we can see from here. Okay. So bookmap, in that way, it's really helpful to see where the large market participants exist. Accordingly, we can plan our trade. If we see some market participants here, like large market, large ask upside, so there is a possibility that it might go up, consume the ask, or if there are any other higher ask, it might go there as well. Okay, so whatever stock we are selecting, we'll try to find out whether we are having large bid to the downside or large ask to the upside, not both. Okay, if there is a both large bid and ask, there is a high probability it will chop around. Straight away avoid that stock. Okay, either we'll go with large bid or large ask, not both. Here, so we have just 1 minute left. Okay, after that we'll switch to another one. Okay, otherwise there's a time limit for 40 minutes. Okay, so here